Hello, I'm Patrick Linnell with the CattleFax Closing Bell, brought to you by CattleFax, the deciding factor. As grilling season demand heats up, the USDA composite cutout pushed to a new yearly high last week for a weekly price of $226.95 per hundredweight. This is expected to be the spring high for the cutout as beef supplies increase in the short run and beef demand slows as we progress through summer. Assuming the May high in the cutout has been set, a typical break to the June low gives the cutout strong support at 210 in June. What this means to the cattle market all depends on the leverage situation between the cattle feeder and the beef packer. Over the last 4 weeks, cattle slaughter has been nearly 5% above year-ago levels. As slaughter continues to increase into the summer, it is likely that slaughter capacity will be tested. The market will need to incentivize the packing segment to harvest the available supplies of market-ready cattle in order to keep the front-end supply current. One way to measure the leverage to the packing industry is the ratio between the fed price and the composite cutout. With cash-fed cattle prices dropping over $10 in the last 2 weeks while the cutout rallied, fed cattle claimed 47% of the cutout price when excluding the drop credit. This is the weakest leverage position for the cattle feeder since the BSE event in 2003, although the circumstances are clearly much different today. Using this 47% and a 210 cutout in June, this implies a practical low for fed cattle in the 108 to 110 area. Later into the summer, the typical seasonal pattern would suggest a low in the cutout of about 200 into July, with fall lows in the 190 area. However, not all of this price risk is expected to be passed on to live cattle. Seasonally, after the summer peak in slaughter passes, the cattle producer should be able to regain some bargaining power. Nonetheless, large slaughter levels will still stretch harvest capacity, and leverage is expected to remain weak for the remainder of the year. Assuming a 50% leverage ratio and a $10 per hundredweight drop credit, a 190 cutout value implies fed cattle prices down to 105 for a fall low. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real. The volatility is extreme. The risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective. Our vision is global. Our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.